Welcome to our channel, your trusted news aggregator bringing you the most important stories from around the world in one convenient place. We save you time by gathering breaking news so you don't have to search multiple sources. If you appreciate what we do, hit that subscribe button and tap the like icon right now. The financial world witnessed something extraordinary today. Gold shattered records, climbing to an unprecedented peak of $4,690 per ounce. Silver followed suit, reaching an all-time high of $94.12. Markets around the globe trembled. The catalyst? President Donald Trump issued a stunning threat over the weekend. 8 European nations now face escalating tariffs unless the United States is allowed to purchase Greenland, Denmark, France, Germany, the United Kingdom, Sweden, Norway, the Netherlands, Finland, all of them targeted. The tariff structure is aggressive. 10% starting February 1st? If no deal materializes by June, that number jumps to 25%. These aren't distant trading partners. These are NATO allies, historical partners in defense and diplomacy. Make sure you're subscribed and have notifications on, because this story is developing rapidly and you won't want to miss what happens next. The market response was immediate and severe. Investors fled to safety. Gold surged 1.6% in early trading. Silver climbed 3.6%. The dollar weakened against major currencies. Stock markets across Europe fell sharply, with Frankfurt and Paris retreating around 1.5%. This isn't happening in isolation. The Trump administration has already arrested Venezuela's leader. Threats against Iran escalated just last week. Now Greenland. Each move adding another layer of uncertainty to an already volatile geopolitical landscape. Christopher Wong, strategist at OCBC, explained the silver phenomenon. The medium-term narrative remains constructive, he said, supported by persistent physical deficits and resilient industrial demand, but he cautioned about the pace of recent gains. The gold-silver ratio has collapsed from 105 in late 2025 to the low 50s now. Think about what that means. Silver is outperforming gold at a historic rate. Industrial applications. Solar panels, electronics, all driving demand while safe haven investors pile in simultaneously. European Union ambassadors convened emergency discussions Sunday night. They're preparing retaliatory measures. 93 billion euros worth of American goods could face European tariffs in response. French President Emmanuel Macron is pushing to activate what's called the anti-coercion instrument, the EU's most powerful trade retaliation tool, never before deployed. If you're finding this information valuable, show your support by hitting that like button and subscribing to stay informed. German Finance Minister Lars Klingbeil didn't mince words Monday. We are constantly experiencing new provocations, he stated. We are constantly experiencing new antagonism, which President Trump is seeking. The limit has been reached, he warned. United Kingdom Prime Minister Keir Starmer called an emergency press conference. A trade war is in no one's interest, he declared. The use of tariffs against allies is completely wrong. The tension is palpable. This isn't just economic policy. This represents a fundamental shift in how America engages with its traditional partners. The liberal international order established after the Cold War appears to be fracturing before our eyes. Matt Simpson, senior analyst at StoneX, captured the moment perfectly. Geopolitical tensions have given gold bulls yet another reason to push the yellow metal to new highs, he said. With Trump throwing tariffs into the mix, it is clear that his threat to Greenland is real, and we could be one step closer to the end of NATO. Let that sink in. The end of NATO, an alliance that has maintained peace in Europe for over 70 years, now questioned because of a territorial dispute over an Arctic island. Charu Chanana from Saxo Markets highlighted the unique nature of this crisis. The Greenland-inspired tensions point to a deeper geopolitical fault line, she explained. Using tariff threats inside the alliance is a kind of trust shock that can leave a stickier risk premium. A trust shock. Between allies who have stood together through decades of challenges, the implications extend far beyond precious metals markets. The European Parliament took decisive action. Senior figures on the International Trade Committee halted work on last year's EU-US trade deal. Votes scheduled for January 26th and 27th have been postponed indefinitely. 23 members of parliament from across party lines wrote to the parliament president demanding a freeze until America drops its threats. Don't forget to subscribe and enable notifications so you never miss critical updates on this developing situation. Gold's rally this year follows an already extraordinary 2025. The precious metal gained more than 64% last year. Now it's up another 8% since January 1st. The momentum shows no signs of slowing. Lin Tran, senior analyst at XS.com, explained the dynamic. When institutional and policy risks resurface, markets tend to react swiftly by reallocating towards safe haven assets, she said. Gold once again emerges as the preferred choice. But there's more at play here. The Trump administration has renewed attacks on the Federal Reserve. Questions about central bank independence are intensifying. Investors are gravitating toward what's being called the debasement trade, avoiding currencies and government bonds over concerns about debt levels. The Supreme Court will hear arguments Wednesday on President Trump's effort to fire Federal Reserve Governor Lisa Cook. That decision could prove pivotal for the central bank's independence. Markets are watching closely. Neil Wilson from Saxo UK summarized the mood. Gold surged to a record high and stocks wobbled as fresh worries about Greenland surfaced, he noted. The correlation is undeniable. Uncertainty drives precious metals higher. Asian markets reflected the global anxiety. Tokyo fell. Hong Kong retreated. Shanghai declined. Sydney dropped. Singapore weakened. Only Seoul and Taipei managed slight gains. Wall Street remained closed for Martin Luther King Day, but futures pointed sharply lower. The luxury and automotive sectors suffered particularly hard. LVMH shares plunged 4%. BMW dropped 4%. Investors are pricing in the possibility of a prolonged trade conflict with Europe. JP Morgan analysts weighed in with their assessment. They prefer gold over silver at these levels. Any disruptive correction in silver could have near-term contagion into gold, they warned. But they still view pullbacks as buying opportunities in gold, which continues to have a cleaner, bullish structural story. If this analysis is helping you understand these complex market movements, please hit subscribe and like to support our work bringing you consolidated news coverage. The International Monetary Fund upgraded its 2026 global growth forecast Monday, projecting 3.3% growth. But they included a stark warning. A reevaluation of AI productivity gains or renewed trade tensions could bring disruptions. Renewed trade tensions? That's exactly what we're witnessing. The IMF's optimistic forecast may need revision if this Greenland dispute escalates further. Central banks worldwide have been accumulating gold at record rates. They recognize what individual investors are now discovering. In a world where alliances shift and economic nationalism rises, physical assets that transcend political boundaries hold unique value. The gold-to-silver ratio tells a compelling story. From 105 just months ago to the low 50s today, silver's industrial applications give it dual appeal. It's simultaneously a precious metal and a critical industrial commodity. Solar panels alone require significant silver quantities, and the green energy transition is accelerating. Denmark finds itself at the center of an unprecedented crisis. Greenland is a Danish autonomous territory. The idea that America would use economic coercion to acquire it has shocked the international community. This isn't 19th century imperialism. This is 2026. The 10% tariff starts in just 13 days, February 1st. That's when European goods entering America will face the new levy. If negotiations fail, June 1st brings the 25% rate. The timeline is compressed. The stakes are enormous. European unity is being tested. The joint statement from the 8 targeted nations emphasized they stand united. But will that unity hold under sustained economic pressure? Different European economies have different vulnerabilities. Germany's export-dependent economy faces particular challenges. The spot gold price near $4,700 represents more than just a number. It represents a collective judgment by global investors that traditional safe havens like government bonds and currencies are no longer sufficient. Physical assets with intrinsic value are commanding premiums. Silver at $94 demonstrates similar dynamics with added industrial demand factors. The white metal has risen over 30% so far this year. That's an extraordinary move in such a short period. Some analysts warn that the pace may warrant near-term tactical caution. Remember to subscribe and like this video to stay updated as this situation develops throughout the week. The dollar's weakness against major currencies signals something profound. When America threatens its closest allies, the reserve currency status itself comes into question. The yen strengthened. The Swiss franc gained. The euro rose. Investors are hedging against dollar exposure. Federal Reserve policy adds another layer of complexity. Markets expect the Fed to hold rates steady at their January 27th to 28th meeting, but they're pricing in at least 2 25 basis point cuts this year. Lower interest rates typically boost gold because the opportunity cost of holding non-yielding assets decreases. Vice Chair Michelle Bowman suggested the Fed should stand ready to cut rates if the job market weakens. That dovish stance, combined with political pressure on the central bank, creates a perfect environment for precious metals. Bitcoin fell nearly 3% today, trading around $92,500. The cryptocurrency, often touted as digital gold, is proving less resilient than physical metals during this particular crisis. Over $600 million worth of bullish crypto positions were liquidated in the last 24 hours. The divergence is instructive. When geopolitical tensions escalate to this degree, investors gravitate toward assets with thousands of years of history as stores of value. Gold and silver have survived empires, wars, and financial collapses. Their track record speaks for itself. Looking ahead, volatility is guaranteed. The Supreme Court hearing on Federal Reserve independence. The February 1st tariff implementation. Potential European retaliation. Each event could trigger significant market movements. Rahul Kalantri from Meta Equities emphasized that added concerns around political stability, questions over U.S. monetary policy independence, and ongoing geopolitical risks have further supported gold. Multiple factors are converging simultaneously. The wedding season in India is being affected. Families planning major gold purchases are watching prices with anxiety. What was budgeted months ago no longer covers the same quantity. This isn't just an investor story. It's touching ordinary people's lives. Make sure you're subscribed with notifications enabled, because the next few weeks will be critical for global markets and geopolitical relations. The broader commodities complex is also moving. Platinum added almost 1%, reaching $2,355 per ounce. Palladium rose 0.7% to $1,811. The entire precious metals sector is benefiting from safe haven flows. Industrial metals showed volatility too. Copper initially plunged over 3% before recovering somewhat. Tin fell nearly 5% from recent all-time highs. The confusion about which commodities might face tariffs and which might be deemed critical minerals is creating whipsaw price action. Trump's decision not to impose tariffs on critical minerals added complexity. Instead, he ordered Commerce Secretary Howard Lutnick to negotiate purchase agreements with price floors to protect domestic production. The strategy is evolving in real time, making it difficult for markets to price risk accurately. China's economy grew at one of its slowest rates in decades last year, official data revealed Monday. Authorities struggled to overcome low consumer spending and a property sector debt crisis. That adds another dimension to global economic uncertainty. Japan's Prime Minister Sanae Takaichi dissolved parliament, calling a snap election for February 8th. She's hoping for a stronger mandate to push through ambitious policies. Political transitions in major economies during a trade crisis rarely calm markets. The confluence of events is extraordinary. American threats against European allies, China's economic struggles, Japanese political uncertainty, Middle East tensions, Venezuelan regime change, Federal Reserve independence questions. Each factor alone would move markets. Together, they're creating historic volatility. Gold's technical levels are worth noting. Support exists around 141,650 rupees in Indian markets, with resistance at 145,670. In dollar terms, analysts are watching the 4,600 level closely. A sustained break above 4,700 could trigger fresh buying. Silver's technicals are equally compelling. The $90 psychological barrier has been convincingly broken. Some traders are targeting $75 as the next major level if momentum continues. Others warn that profit-taking could trigger sharp corrections. Please subscribe and hit the like button to help us continue bringing you comprehensive news coverage from multiple sources. The debasement trade concept deserves deeper examination. Investors are simultaneously selling government bonds and currencies while buying physical assets. The fear is that excessive government debt, combined with political pressure on central banks, will lead to currency devaluation. Gold and silver benefit directly from those concerns. Central bank gold purchases reached record levels in recent years. China, Russia, and other nations have been systematically reducing dollar reserves and increasing gold holdings. That structural demand provides a floor under prices even during temporary pullbacks. The World Gold Council's 2026 outlook emphasized diversification and stability as key drivers for both investors and central banks. The organization noted that gold's track record during periods of geopolitical and economic uncertainty makes it an essential portfolio component. Remember, our channel aggregates news from multiple trusted sources to save you time. We cut through the noise to bring you the most important developments. Subscribe and like to support this mission. The luxury sector's 4% decline tells its own story. High-end goods are discretionary purchases. When tariff threats emerge and economic uncertainty rises, consumers and investors pull back. LVMH, the world's largest luxury conglomerate, saw significant selling pressure. The automotive sector's decline reflects different concerns. Cars represent major exports for European manufacturers, like BMW. A 25% tariff would devastate competitiveness in the American market. The industry is already struggling with the transition to electric vehicles and Chinese competition. Trade wars create no winners in the long term. Prices rise for consumers, supply chains fragment, economic growth slows. The apparent lessons from the 2018 to 2021 trade tensions seem forgotten. History may not repeat, but it certainly rhymes. The European response will be crucial. If they implement retaliatory tariffs quickly, the spiral of escalation could accelerate. If they attempt negotiation and delay, they might appear weak, encouraging further American demands. The strategic dilemma is profound. Greenland itself has a population of just 56,000 people. The island is rich in rare earth minerals and holds strategic military value due to its Arctic location. Climate change is making Arctic shipping routes more viable, increasing the territory's importance. But the idea of purchasing it from Denmark in 2026 seems surreal. Trump floated the Greenland purchase idea during his first presidency. It was dismissed as unlikely then. The fact that he's returned to it with tariff threats suggests serious intent this time. The international community is struggling to calibrate an appropriate response. Subscribe now and enable all notifications to ensure you don't miss any developments in this rapidly evolving situation. The phrase trust shock used by analyst Charu Chanana captures something essential. When allies can no longer trust each other, every interaction becomes transactional. Long-term cooperation suffers. The institutions built over decades to manage international relations weaken. NATO's Article 5, the collective defense provision, seems abstract until moments like this. If America threatens economic warfare against treaty allies over territorial disputes, what does collective defense mean? These questions aren't academic. They strike at the foundation of post-war international order. Gold doesn't care about alliances or treaties. It doesn't discriminate between currencies or pledge loyalty to governments. That's precisely why it's surging now. In a world of shifting allegiances and economic nationalism, the ancient metal offers something increasingly rare: certainty. Silver's industrial demand provides additional support beyond safe haven flows. Global solar panel installations are accelerating. Electric vehicle production, despite recent headwinds, continues growing, Electronics manufacturing remains robust. Each application requires silver. The supply deficit situation is real. Mining production struggles to keep pace with combined industrial and investment demand. New silver mine development takes years. Existing mines are depleting. The supply-demand fundamentals suggest higher prices ahead even without safe haven buying. The $4,690 gold price and $94 silver price will be remembered as historic milestones. Whether they represent temporary peaks or plateaus on the way to even higher levels depends largely on how this Greenland dispute resolves. February 1st arrives in less than 2 weeks. Will Europe blink? Will Trump negotiate? Will the tariffs actually be implemented? Each scenario leads to different market outcomes. Uncertainty is the only certainty right now. Don't forget to subscribe and like this video. Your support helps us continue delivering consolidated news from trusted sources around the world. The broader question is whether this represents a temporary crisis or a fundamental realignment. If NATO survives intact and trade relations normalize, markets may stabilize. If alliances fracture and economic nationalism intensifies, we may be witnessing the early stages of a prolonged period of volatility. Gold thrives in exactly that environment: political instability, economic uncertainty, monetary policy questions, geopolitical tensions. Every single factor currently present supports higher precious metals prices. The Federal Reserve independence question looms large. If the Supreme Court rules that the president can fire Fed governors at will, central bank credibility suffers globally. That would represent a seismic shift in monetary policy governance with implications extending far beyond American borders. Markets are forward-looking mechanisms. They're pricing in these risks now. The $4,690 gold price reflects not just current conditions, but expectations about the future. Investors see trouble ahead. Silver's rally above $90 breaks psychological barriers that have capped prices for years. Once these levels become established, they often serve as new support rather than resistance. The technical picture has transformed dramatically. The correlation between dollar weakness and precious metals strength played out perfectly today. As the greenback fell against major currencies, gold and silver surged. This relationship is well established, but watching it unfold in real time during a geopolitical crisis is sobering. European luxury and automotive stocks may have further to fall if tariffs are actually implemented. A 4% decline could be just the beginning if a full-scale trade war develops. Investors should watch these sectors as leading indicators of broader economic impact. Make sure you're subscribed with notifications on. The next few weeks will bring crucial developments you won't want to miss. The aggregation of multiple crises creates compound effects. Each individual issue might be manageable. Combined, they create a perfect storm for market volatility: Venezuela, Iran, Greenland, Federal Reserve, China's economy, Japan's politics. The list continues growing. Precious metals investors are being rewarded for their positioning. Those who bought gold at $3,000 or silver at $50 have seen extraordinary gains. But timing market tops is notoriously difficult. Some analysts warn of near-term corrections. Others see continued upside. The institutional money flowing into gold is significant. Not just retail investors buying coins and small bars, major funds, central banks, sovereign wealth funds. The big money is allocating to physical assets at an accelerating pace. Bitcoin's decline despite its supposed safe haven status is noteworthy. The cryptocurrency narrative of being digital gold is being tested. When genuine geopolitical stress emerges, investors still prefer the physical metal. This reveals something important about risk perception. The $600 million in liquidated bullish crypto positions represents forced selling. Leveraged traders betting on continued price increases got caught wrong-footed. That kind of violent deleveraging event can create cascading effects across digital asset markets. The contrast with gold's steady climb is stark. No forced liquidations. No leverage-driven flash crashes. Just consistent buying pressure from investors seeking safety. The comparison highlights fundamental differences between ancient stores of value and modern digital experiments. Subscribe and like to help us keep bringing you consolidated news from multiple trusted global sources. Greenland's strategic importance will only grow as climate change opens Arctic shipping lanes. The Northwest Passage could become a major trade route. Military positioning in the Arctic affects global power dynamics. These aren't abstract concerns. They're concrete strategic realities. Denmark's position is uncomfortable. Refusing American demands risks economic consequences. Acquiescing sets a dangerous precedent where powerful nations can coerce territorial transfers through tariff threats. There's no good option, only less bad alternatives. The 8 targeted European nations must maintain unity to have any negotiating leverage. If one breaks ranks and cuts a separate deal, the coalition crumbles. Trump's strategy may be designed to exploit exactly those potential fractures. Germany's export economy makes it particularly vulnerable to tariff threats. France's agricultural sector could face similar pressures. The UK, already navigating post-Brexit complexities, has limited appetite for additional trade conflicts. Each nation has specific vulnerabilities, yet fracturing European unity would have consequences beyond this immediate crisis. It would demonstrate that American economic pressure can divide the continent. That lesson wouldn't be forgotten. Future negotiations would reference this precedent. Gold at $4,690 is pricing in continued uncertainty. The market expects this crisis to persist. Sharp resolution seems unlikely. Protracted negotiations appear more probable. Each day of uncertainty supports higher precious metals prices. Silver at $94 benefits from both safe haven demand and industrial fundamentals. The dual support structure makes corrections potentially less severe than in purely speculative assets. Buyers exist at multiple price levels for different reasons. The financial sector is also watching closely. Banks with significant European exposure face currency risks. Trade finance could be disrupted. Payment systems might need reconfiguration. The operational challenges extend beyond simple tariff arithmetic. Subscribe now and hit that like button to stay informed about all developments in this critical story. The IMF's upgraded growth forecast may prove overly optimistic if trade tensions escalate. Economic models struggle to price political chaos. Standard assumptions about rational actors cooperating for mutual benefit break down when nationalism dominates decision-making. Technology stocks could face particular headwinds. Semiconductor supply chains span multiple countries, including those targeted by tariffs. Disruptions could affect production timelines and costs. The sector's recent AI-driven gains might face challenges. Energy markets are watching developments too. Oil prices have been volatile following the Venezuelan leader's arrest and Iranian tensions. Adding European trade conflict to that mix creates additional uncertainty. Energy security questions could resurface. The interconnected nature of modern economies means tariffs anywhere affect supply chains everywhere. Components cross borders multiple times during production. Final assembly location doesn't capture the complexity. Trying to unwind these relationships creates enormous costs. China is observing European-American tensions with interest. Anything weakening Western alliance cohesion serves Chinese strategic interests. The Greenland dispute may influence calculations about Taiwan or South China Sea policies. Ripple effects extend far beyond the Arctic. Russia similarly benefits from NATO disarray. If the alliance appears weak or divided, Russian bargaining power in various negotiations increases. Geopolitical chess pieces are moving across multiple boards simultaneously. Gold doesn't care about any of these strategic considerations. It rises simply because uncertainty increases. The metal is politically neutral. That neutrality is precisely what makes it valuable during politically charged periods. If you value this comprehensive news aggregation service, please subscribe and like to support our continued coverage. The $4,690 gold price represents a 1.6% gain today. Silver's 3.6% increase is larger in percentage terms. That relationship, with silver outperforming, suggests strong risk appetite within the safe haven trade itself. Traders are willing to accept silver's higher volatility for its greater upside potential. That calculation could change if risk aversion intensifies further. Flight to the safest safe haven, gold, might accelerate. The gold-silver ratio could reverse its recent decline. Professional money managers face difficult decisions. Reducing equity exposure now might mean missing rebounds. Maintaining current allocations risks drawdowns if conflicts escalate. Position sizing and risk management are being tested. The correlation between traditional safe havens like gold and newer alternatives like Bitcoin broke down today. That divergence provides information about market psychology. Physical, tangible assets are preferred when geopolitical tensions reach this intensity. European bond markets showed stress too. Not reported in detail yet, but spreads between German bonds and peripheral European debt likely widened. Investors price in political risk through credit spreads. The Greenland dispute creates exactly that kind of risk. Currency hedging costs are probably increasing for European companies with American exposure. Options prices reflect elevated volatility expectations. The derivatives market is pricing in continued turbulence. Subscribe and enable notifications so you don't miss any updates as this situation develops through the week. The 10% tariff starting February 1st is significant but not economically devastating by itself. The 25% June 1st level would be genuinely damaging. The escalation timeline is designed to create negotiating pressure. European negotiators must decide whether to engage with that timeline or reject the entire premise. Engaging legitimizes the tactic. Rejecting it risks immediate economic consequences. The choice reflects deeper questions about sovereignty and coercion. Greenland's own population has expressed no interest in becoming American. Self-determination principles suggest their preferences matter, but those principles clash with great power politics. The dissonance is troubling for international law advocates. Gold's rally reflects awareness that rules-based international order is weakening. When power politics dominates, physical assets that can't be confiscated or devalued through political decisions become essential. This is ancient wisdom reasserting itself. Silver's industrial demand might actually increase if trade tensions force supply chain reconfiguration. New facilities in different countries would require silver for construction and operation. That's a paradoxical outcome where conflict drives demand for the metal. The European automotive sector's decline reflects real concerns about American market access. BMW, Mercedes, Volkswagen all depend significantly on U.S. sales. 25% tariffs would require either accepting reduced margins or raising prices and losing market share. LVMH's decline shows luxury goods aren't immune to geopolitical stress. Wealthy consumers might continue buying, but investor confidence in growth trajectories weakens. Valuation multiples compress when uncertainty rises. Make sure you're subscribed and have liked this video to support our mission of aggregating news to save you time. The broader market message today was clear. Safety over growth, certainty over speculation, physical over financial. These shifts happen during genuine crisis periods. Whether this crisis passes quickly or intensifies will determine if the shifts persist. Central bank gold buying will likely accelerate further. Today's price action reinforces the strategic case for diversification away from dollar-denominated assets. That structural trend supports higher gold prices over time. Mining companies face interesting dynamics. Higher gold and silver prices boost revenues. Their operational costs are rising too. Currency fluctuations affect international producers. The stocks don't always track metal prices perfectly. Physical metal ownership is increasing among retail investors. Coin dealers report strong demand. Premiums above spot prices are widening. That grassroots participation suggests the rally has room to run beyond just institutional flows. The psychological impact of $4,690 gold shouldn't be underestimated. Round number barriers break down mental resistance. $1,500 becomes the next target psychologically even if technical levels suggest different points. Silver at $94 similarly breaks the $90 barrier decisively. $100 per ounce becomes plausible rather than fantastical. Expectations are shifting upward across the precious metals complex. European unity will be tested in ways not seen since the Eurozone debt crisis. That crisis threatened the currency union itself. This tariff threat challenges political cohesion. Different crisis, but potentially equally consequential. Subscribe now with notifications enabled to stay updated on all breaking developments in this critical story. The Federal Reserve's independence question connects to precious metals through monetary policy credibility. If political control over rate decisions is established, long-term inflation expectations rise. Gold benefits directly from those inflation concerns. Supreme Court arguments Wednesday will be watched intensely by market participants. The legal reasoning could establish precedents extending far beyond one governor's firing. Constitutional separation of powers is at stake. Trump's willingness to challenge institutional norms has been consistent. The Fed, NATO, trade agreements all face pressure. That creates an environment of continuous uncertainty. Markets hate uncertainty more than almost anything else. Gold thrives in uncertainty. Silver benefits too. Platinum and palladium rise as well. The entire precious metals sector is the beneficiary of political chaos. That's an uncomfortable truth, but an observable market reality. Asian market reactions tomorrow will provide additional signals. European markets responded negatively today. American markets were closed for the holiday. Tuesday's New York Open could see catching up selling pressure. Or possibly investors might view today's decline as overdone and buy the dip. Market psychology is difficult to predict in these environments. What's clear is volatility will remain elevated. Oil prices haven't been discussed much but deserve attention. The Venezuela situation affects supply. Iran tensions affect supply. If Greenland dispute escalates to affect energy trade, prices could spike. Inflation concerns would intensify. That inflation channel provides another route for gold gains. Whether through monetary policy concerns or actual price increases in goods, INFLATIO and fears drive precious metals higher. Multiple paths lead to the same destination. Please subscribe and like this video. Our aggregation service brings you news from multiple sources, so you don't have to search everywhere yourself. The Indian wedding example illustrates how global financial markets affect everyday lives. A family's budget established months ago no longer buys the same amount of gold. That creates real hardship and disappointment. Multiply that scenario across millions of families and businesses worldwide. Budgets based on one set of assumptions no longer work. Recalculation and adjustment create friction and inefficiency throughout the economy. Trade wars impose costs beyond simple tariff amounts. Uncertainty itself is costly. Businesses delay investment decisions. Consumers postpone major purchases. Economic activity slows even before tariffs are implemented. The countdown to February 1st, just 13 days away, creates pressure on all parties. Negotiations might accelerate, or positions might harden. The timeline forces decisions that might otherwise be delayed indefinitely. Gold at $4,690 represents consensus among global investors that risks are rising. Silver at $94 confirms that judgment with added industrial demand factors. The message is clear and troubling. European leaders face domestic political pressures too. Appearing weak against American demands carries electoral costs. But economic damage from trade wars also hurts politically. There's no cost-free option. Only trade-offs between different types of pain. The liberal international order that emerged after World War II assumed great powers would cooperate through institutions rather than coercion. The United Nations, NATO, the World Trade Organization, all built on that assumption. If that assumption no longer holds, the entire architecture of international relations needs rethinking. Gold's rally suggests markets believe we're in exactly that transition period. Uncertainty about the new equilibrium drives safe haven demand. Subscribe with notifications enabled so you don't miss any crucial updates as this unprecedented situation unfolds. Silver's supply deficit situation deserves emphasis. Industrial demand continues growing. Investment demand is surging. Mining production isn't keeping pace. Inventories are declining. That's a recipe for much higher prices over time. The current rally might pause for profit-taking, but the structural fundamentals support a sustained bull market. Those who understand the supply-demand dynamics are positioned for long-term gains. Gold's monetary role is reasserting itself globally. For decades, paper currencies seemed sufficient. Recent years have revealed currency vulnerabilities. Excessive debt, political pressure on central banks, geopolitical fragmenting. These factors make gold relevant again. Central banks who bought gold over the past decade are looking prescient now. Those who didn't are probably reconsidering. The next wave of official sector buying could dwarf previous accumulation. Retail investors are learning the same lesson. Portfolio diversification into physical assets provides protection that financial assets alone can't match. That awareness is spreading. Educational content about precious metals is seeing increased interest. People want to understand what's happening and how to protect themselves. That knowledge-seeking behavior typically precedes major investment flows. The $4,690 gold price and $94 silver price will be remembered as historic markers. Whether they represent local peaks or launching points for even higher levels remains to be seen. What's certain is that the underlying causes of today's rally aren't resolving quickly. Greenland negotiations, assuming they happen, will take time. Federal Reserve independence questions won't be settled immediately. European unity will be tested continually. Make sure you're subscribed and have liked this video to support our comprehensive news coverage from multiple trusted sources worldwide. The precious metals rally is happening despite, or perhaps because of, a closed American market today. European and Asian markets drove the gains. That global participation is significant. This isn't just American investors seeking safety. When world markets agree that risks are elevated, the consensus becomes self-reinforcing. More investors seek safety. Prices rise further, that attracts attention. More investors allocate to precious metals. The cycle continues. Breaking that cycle requires genuine risk reduction. Concrete progress on negotiations, de-escalation of tensions. Policy clarity from central banks, none of those seem imminent today. Therefore, the path of least resistance for gold and silver appears upward. Corrections will occur. Profit-taking is inevitable. But the trend is established and supported by fundamental factors. Trading versus investing considerations differ in these environments. Traders can profit from volatility in both directions. Investors focus on longer-term positioning and protection. Both approaches are valid for different objectives. The luxury of dismissing geopolitical noise doesn't exist currently. These aren't minor diplomatic spats. These are foundational questions about international order and alliance relationships. Markets correctly perceive the significance. Gold and silver are voting with price action that says trouble is brewing. Listening to that market message makes sense even if hoping for different outcomes. This is a developing story. Subscribe now and enable all notifications to stay informed as events unfold through the coming days and weeks. Hit that like button to show your support for our aggregation service, bringing you consolidated news from multiple trusted sources. Thank you for watching. We'll continue monitoring this situation and bring you updates as they emerge. Remember, we're here to save you time by gathering the most important news in one place. Subscribe and like to stay informed.